What's going on, guys? Welcome back to the video. Today, gonna be looking at another video from the news about long-term auto loans. I heard about this before. Um, they've been increasing people auto loans. Like the term. Like usually, I mentioned this a while back. The longest term was 72 months, right? The lowest term I think is 36 months. So people used to have a term of 36, 48 months, and 72 months. 84 months, there's an 84-month loan. But now they got loans longer than that. But I'm gonna tell y'all something. The longer the loan, the more interest is gonna be put on for the car. Now, it is gonna make the payments cheaper monthly, but you gotta think of it like this, y'all. The longer the loan, let's say you got a new car, 2026, you got a 2026 model. Let's say your term is, let's just say, you got 84. Let's say your term is 90 something, right? 90 something a month, right? So imagine that's your term. It's going to be a higher interest rate, right? Because it tells the lenders you're not a reliable, you don't, first of all, you don't have the money. So now they got to give you more. Basically, you don't have the money. So they got to try to stretch out the loan. But when the longer they stretch out the loan, the more interest you have to pay for that vehicle. And you could get the vehicle and you paying for the loan for, let's say, 6, 7, 8, 9 years. You're still paying off on a car that's depreciating over time. While you still paying off for a 2026 model, there's a 2029 model that's coming out. All right, so that's 3 years. You're still paying off the car. So now there's a 2030 model that came out, right? And then by the time you finish, it may be another model. You just got done paying the car off, right? Your loan was probably $35,000, right, for the car. That's how much you brought the car out the door, 35,000. But you had to pay it. You're paying it monthly, maybe I'm gonna say 305 a month. But it took you 8 to 9 years to pay it off. So then the thing is, if you want to trade that car in or get rid of the car, the sale value for the car is probably, we went from 35 and it dropped all the way down to 20 or probably $17,000 for the car. So besides you waiting 8 to 9 years to get the car used and just buy it out for 20 grand, you paid 35 grand, but you lost 15 grand. And these long-term auto loans they're not the savior of cheaper loans. It's not going to save you. You're going to owe more money with long-term loans. But anyway, let's get to the video. Let's start it up.
We'd be nowhere without our vehicles, literally. But knowing car prices have jumped 30% in the last 5 years sure does take the air out of one's tires.
Nowadays, no one can afford it. So this was my first used vehicle.
Rebecca Smith bought her Jeep with the help of long-term financing that's growing more common, a loan that's nearly 100 months, 96 to be exact.
Let's just be
I was just talking about that. Let me back it up real quick. 96 months, 8 years. That's not a good loan. I don't care how badly you want the car. If you can't get a loan at least 72 months, 72 months is more like 4, maybe 4 to 5 years. A 5-year loan isn't even that bad. 8 years, I can see 5, y'all. 8 years, 96 months. By the time you pay that car off, it's a whole brand new car that's coming out for that model year. You still rocking the old one. Not, I mean, it's nothing wrong with it, but you better off just buying and use.
Exact.
Let's just be frank, it's lower payments, and no one is looking at the long term. You know what I'm saying? You look at what you can afford. So, like buying a house.
With the average monthly payment for a new car at $750,
$750. I would never pay for. Who is paying these prices? $750 for a brand new car? When I got my car, or how about this, y'all? I got one. When I got my car back during the COVID time. Well, COVID times. My car is a Honda. I got a Honda Civic, right? 2023 Honda Civic. I got my car in 2022. I put down $10,000 on the car. Why? Because I want to keep the car. So I get them 10 grand. They said, okay, did the calculations. Okay, we're gonna give you a 5.5% interest. Most people was at 7% with the auto loans, but they gave me 5.5%, right? And then they said your monthly payments will be $390 a month. I said, cool, $390? That's cool. But then I get them more. They wanted $390. But every so often I went from, what was it? I started off at 400, 410, 420, and then whenever you get those tax returns, okay, boom, straight to the car. Boom, boom, a bonus, boom, extra money, boom. I don't give them. They can say $260 a month. Okay, you think you're saving? You think you're saving money? No, to kill off that interest. Cause think about it. You can have a 3% interest. That's still good too. But if you don't want to pay the interest, pay the car off as fast as possible. That's why I always tell people when you buy a car, put a big fat down payment on the car. Not no 500, 1,000. Because if you can't put down 5 grand or more, don't buy the car. Even if it's a used car. It doesn't matter. You put down at least $5,000 to $10,000 on the car. At least. You don't have to put 20 grand on a car, but at least 5 to 10 grand. Especially if you plan on keeping the car, just put the money down on it. But 750 a month? I'm gonna continue.
and 530 used, it can feel like a mortgage. And just like a home loan, the longer the term, the higher the interest rate and overall cost. But unlike your house, which generally appreciates in value, your vehicle does the opposite. That's why dealers like Darla Boer, owner of Deal Depot in Greer, advise against lengthy car loans.
Is it dangerous to get a 100-month term on a car?
Absolutely. Let's take, for example, that 3 years into it, you have an accident, you total loss it.
I like this lady. At least she's being honest. That's what I was trying to say.
And you find out that your payoff is significantly higher than what the insurance company is going to pay for that car because you've depreciated it.
Then you're stuck with what's called negative equity, either paying the difference or defaulting on your loan.
Well, let's do an example. With a $35,000 purchase price vehicle with $3,500 down.
Boer crunched the numbers to show the difference between a standard 60-month term and an 84-month term. The monthly payments are just shy of $500 for the longer loan versus $635 for the 5-year term. But overall, you'd pay $3,200 more over the life of the 7-year loan. For the 8-year, the difference is thousands more. That's because of both the length and the higher interest rate that generally comes with longer loans.
That's a high APR percentage. For 60 months, 7.7%, and 84 months, 7.5, 96 months, 8.9. That's nowhere near the percentage I have.
loans.
No matter what term loan you get, you should always consider paying a little extra each month. Any overage goes right to paying down the principal, so it reduces the length of the loan and the amount of interest you pay overall.
Mhm.
While the 8-year loan is generally only offered at select new car dealerships, lenders like Greenville Heritage Federal Credit Union have begun offering the 7-year loan. Executive Vice President Lisa Broadnax says the 84-month term is to give members options, but more as a last resort.
If you have to stretch something out to 96 or 100 months, you really shouldn't be buying the vehicle.
What's the biggest
Thank
mistake
you.
you see when people are buying a car?
Falling in love with the car and not with the deal.
She says backing into a car purchase is advised, where buyers first get pre-approved financing to figure out exactly what they can afford before they go to a dealer. The credit union says it can also steer members towards reputable dealerships.
Because of our 85
You have to get pre-approved, and that is true. When I got my car, and I tell people all the time, it's always good to get pre-approved for two reasons. What they just said, and then you can see what type of car you can afford, and then also some dealerships, the good ones, if they feel like if they see your pre-approved deal, right, they can try to give you a better offer. So they might say, okay, you got 5.3% with this credit union. How about this? We got you. We'll give you 4 point something, or we'll give you 3%. And then you'll save more money with them. If you know what I'm saying, then they might give you a good percentage, and then they might give you a lower monthly payment. Especially if they say, oh, yeah, you put this much down, besides you paying 390, 5.5, we'll give you 4.5, and you'll only pay 350. If you take our loan, take our lender and pay through us, and stuff like that, and use them to pay for your car.
5 years of service, we do know local dealers who are never overpriced, who stand behind their word. If there's any mechanical issues, they'll help the member with them.
Kristen Hart used her own credit union for financing. Her advice: skip the extras like gap insurance and extended warranties.
Mhm.
It drove up the payment. So I realized that I didn't need that. So I took that off and it went down to about $380.
But gap insurance is sometimes useful though, especially when someone's steal your car or something bad happened to your car. But extended warranties, yeah, that's BS. You don't need no extended warranty. And me personally, I don't need it because I'm just gonna fix my own car anyway, or take it to someone that knows what they're doing. Besides, I mean, I only take my car to the dealership when I had the free warranty for the 3 years. After that, I take it to somewhere else.
A month, so which is perfect compared to $441.
And of course, the biggest savings comes if you have good credit like Legeric Cannon.
I could pay it off faster because the interest rate is not so high. I'm not getting eat up by interest rates.
If you don't have time to improve your score, at least aim to purchase your car towards the end of the month when dealerships are more likely to offer better deals.
Mhm.
And like Smith, who recently paid off that 8-year loan, skip the new car and aim for a low mileage vehicle that's slightly used. If you did it again, do you think you would do another long-term loan?
Oh, I wouldn't be alive. No.
A few more tips from the experts. Buying a slightly used certified pre-owned car can save you thousands over a new car. And the more you have for the down payment, the shorter loan that you'll need. Look,
there is a place in the hills.
That was it. That was basically the end of the video anyway, y'all. But yeah, credit scores are also important. You gotta have good credit, y'all. Credit score gotta be at least 700 or more. It just shows the bank that they can trust you. That's why I know some people are against credit cards, but you don't have to put too much money in your credit card. You can just get a credit card, pay the loan, pay some stuff with it, pay it off before the next billing cycle, like a few days before. So when they see the number zero, they know like you paid. They got the money beforehand. They're like, oh, this person is on point. Okay, next billing cycle. It's like it's a tracker. And once they track to see your progress, they can tell if you're a bad spender and they can tell what type of spender you are, and are you reliable to give the money back when the time is due to give it back. So and then student loans, you got to pay your student loans. It's ways to make it, it's ways to help you and stuff like that if you do your research and your diligence. But it's just it's just crazy. I heard a lot about this loan situation with people buying luxury cars and big SUVs and trucks and paying 600, 700, 1,000 monthly for a car. To me, y'all, it's not worth it. Like, I want after I finish paying my car off, which will be done this year, because I'm not waiting a whole nother year to finish it. I'm trying to get it done as fast as possible before the end of next year. But I'm trying to get me a pickup truck. The F-150. It don't have to be this year. I'm trying to get it used anyway. Ford F-150 XLT. I don't really want the Lariat. I mean, if I get a Lariat, that's cool. I used to not like the XLT because the front face, but then it started growing on me. So I'm good with either or. But yeah, with a V8, yeah, I just need like a work truck and a truck that can haul stuff. That's all I need. And it's funny, this video right here, Ford leads automaker with 153 recalls in 2025. It's funny. But I did look at that video too, by the way. But it's not they just trying to lure people in. Once I started watching that video, they was basically talking good about Ford of how they trying to help customers with the recall situation besides, letting it be bad. Cause that is a bad number. So they trying to stay on point with helping their customers out, according to the news in the video. But yeah, y'all don't do it, y'all. Y'all, if you can't afford it, just get it. Just either look for a used one, something that's gonna get the job done. That's all it is. There's no point in trying to look good for somebody and stuff like that. Like, if you want to get a brand new, it gotta make sense for your pockets. Don't get it brand new because you're trying to impress a girl or impress the other guys or whatever the hell it might be. But a car is a tool. That's what it is. It's a tool to get from point A to point B. Some cars are for fun, for recreational. But overall, if you got the money, by all means. If you don't, just do some research. But yeah, that's the end of the video, y'all. Y'all take care. Enjoy the rest of your day. And remember, stay driven.